Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us understand accounting of share capital with discussion of different types of share capital. Let us read question. Prerna Public Limited was formed with a capital of rupees 10 lakh divided into 10,000 shares of rupees 100 each. This is called as authorized share capital. Of these, 2,000 shares were issued to vendors as fully paid in payment of purchase of building. So out of 10,000 shares, 2,000 shares are issued for a consideration other than cash, that is for purchase of building. 6,000 shares were offered to public, and of these 5,000 shares were applied and allotted, that is subscribed capital. Rupees 10 was payable on application, rupees 25 on allotment. The balance was yet to be called. All the monies called up was duly received with exception of allotment money on 600 shares. This is call scenarios. Calculate authorized, issued, subscribed, called up and paid up share capital, and also call scenarios and uncalled capital. Prerna Limited was formed with capital of rupees 10 lakh divided into 10,000 shares of 100 each. This is authorized capital or registered capital of company. 10,000 shares of rupees 100 each, 10 lakhs. This is authorized share capital. Of these, 2,000 shares were issued to the vendor as fully paid on payment of purchase of building. Company's authorized share capital is 10 lakhs, of which company has issued 2,000 shares for purchase of building. This will be part of issued capital, that is 2 lakhs. Company has also issued to public 6,000 shares of 100 each, 6 lakhs. This will be also part of issued capital. Out of total 10 lakh, company has issued 2 lakh plus 6 lakhs, that is 8 lakhs. 10 lakh minus 8 lakhs, 2 lakhs. This is the amount of unissued capital. 6,000 shares were offered to public, and of these 5,000 shares were applied and allotted. Capital issued to public is 6 lakhs, of which they have applied for 5,000 shares of 100 each. So subscribed capital is 5 lakhs. Out of 6 lakhs, 5 lakh is subscribed capital. That means remaining 1 lakh is unsubscribed capital. Company has so far collected application amount of 10 rupees and allotment amount of 25 rupees. 5,000 shares, total 35 is called up capital per share, which comes to 1,75,000. Company is still to call balance 65 rupees per share on 5,000 shares comes to 3,25,000. This is uncalled capital. Company has not received 25 rupees allotment amount on 600 shares. So calls in arrears is 15,000. Company has already received 35 rupees on 4,400 shares. 1,54,000 will be part of paid up capital. Similarly, on 600 shares, company has not received allotment amount but received application amount 6,000, which is also part of paid up capital of company. 1,54,000 plus 6,000, it is 1,60,000. So we have calculated authorized share capital, issued plus unissued capital. In case of issued capital, issued to vendors, issued to public. In case of issued to public, subscribed capital, unsubscribed capital. In case of subscribed capital, called up capital, uncalled capital. In case of called up capital, calls in arrears and paid up capital. In such type of question, when journal entries are not asked, we are required to show values of various kinds of capital. First, authorized share capital. We have calculated here amount of authorized share capital, that is rupees 10 lakhs. Next, issued share capital. Issued to vendors 2 lakhs, issued to public 6 lakhs. 2 lakh plus 6 lakhs, total 8 lakhs. Subscribed capital 5 lakhs. Called up capital 1,75,000. Paid up share capital 1,60,000. Calls in arrears 15,000. Uncalled capital 3,25,000. With this, we have calculated all the values of capital as required in the question. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.